Okay, we're gonna look at our calendar and we're gonna see that we're right in the middle of earnings season. Right here. We had Netflix come out with their earnings last night, and it was um, better than expected, but they didn't have good guidance. So if a company reports better than expected earnings, but they have worse guidance and guidance that is bad, there's the chance that the stock would probably go down. So next week we have all the major tech stocks in the Mag 7 report. We have Tesla, Microsoft, Google, and Apple report the 23rd and the 24th of July. So so that has a good chance of making the market go up or down. We're currently, let's look at our stochastics for the stock market now. Okay, for the S&P 500, we are still a little bit overbought going down. You can see that we had a major sell-off the little sell-off this week, down 1 or 2%. And let me see. And what happened this week is we had the major tech stocks sell off and rotate the money kind of rotated to unloved part of the stock market, the ones that have not been doing good year to date and have not done good last year. And we've been saying that from um, the beginning of the year, the worst to the first. And it's starting to happen that the worst stocks from last year are the best stocks of this year. Okay, we'll get to that later on. Hold on. Okay, the worst first. So you can see that IT is still doing good this year, but what's happening recently in the past week or two, the unloved sectors, the ones that did bad last year, are outperforming this year. So we have real estate, one of the best performing sectors in the past week, and financials. So you have um, in IT, communication services have been probably the worst performing in the last week, but they're still performing. IT and communication services still performing best year to date. Okay, so we have a rotation going on in the stock market, and um, basically we've had overbought conditions in the stock market for a really long time. If we look at our QQQ stochastics, you can see that we're getting to a point where we're almost oversold 55, halfway between overbought and oversold. I'm looking right here in the stochastics. So we have a ways to go. We're halfway in our channel line. So tech stocks we're right in the middle of our channel if we want to keep this channel going. So we could sell off probably another 5% and get to a point where we're totally oversold in the channel and still in an uptrend. Okay, so let's look at, hold on. Okay, so NVIDIA is going to be the earnings we have to wait 1 month to get the NVIDIA earnings, and that's going to be really big. That's on the 28th of August. We know August and September are some of the worst months seasonality wise in the stock market, and we've been saying that since the beginning of the year. So we know, if you're holding now, there's a very good chance that the stock market's going to be going down in the next couple months. So let me see. Okay, some interesting things that happened since the last time we met. We had U.S. Treasuries yield up 1%. So the 10-year and the 2-year were both up 1% since last week. That is bad for the stock market. So if we look at our US Treasury chart, you can see that as the Treasury has gone down, as the Treasury has gone up right here, the stock market has gone down. So that correlation continues. And as of this morning, um, let's look. As of this morning, the US Treasury is going up. So probably going to have a down day today. Um, let's look at, okay, let's look at what is going on in the stock market. Okay, we have a um, outage today caused by CrowdStrike. Okay, CrowdStrike is one of the um, largest cybersecurity providers in America. And we've been going over that stock for a while. We know it's selling for a premium. It's probably going to gap down today. Rob, okay, let's look at this stock. Okay, and let's look at this. It's going to open down 10% today, I think. Okay, the peg ratio is 1.46. So, um, and let's look at, this is a stock that's been on our radar because it's one of the fastest growing stocks, and it's a very profitable business, cybersecurity. Okay, we're going to be looking at CrowdStrike and CRD. Okay, so we could see that just from looking at the Yahoo Finance that it's 1.46 times overvalued. Now, if you divide this current stock price, 343, by 1.46, you get the price of its fair value. So that's going to be in the 200 range. So we're going to watch that stock. It's down 10%. They sent an update for their cybersecurity this morning, and it made a lot of blue screens of death on Windows terminals around the world. So that's really bad for this company. A lot of companies will actually end up going to maybe Google or Microsoft or another provider because they can't have their operations interrupted like that. So that's a very unprofessional. Um, it's very unprofessional to have an update crash systems around the world. So this is affecting um, a lot of businesses, and that could make the stock market, you know, go down because it could affect. We don't know all the businesses this could affect. Okay, so let's look at the market movers. Okay, so we see the stocks going up and down the most. We have D.R. Horton. They're a housing, brand new housing company. We have Quanta, which is a power services for AI maybe. And we have Cintas, we have Allstate. Okay, so all right, okay, a lot of these are AI related companies. Meta. Okay, we have a theme of AI. Quanta Services, power company for AI. We have Monolithic Power, another power company. We have Meta, which is implementing AI in their advertising. We have Broadcom, makes AI chips and services. And We have NVIDIA, of course. They're the largest chip manufacturer for AI in the world. All right, the ones going down the most. We have Eli Lilly. We have um, a lot of biotech. Eli Lilly is down because there might be some competitors for um, their weight loss drug. We'll go over that later on. We have, I have no insight in the rest of these. Okay, let's look at our sectors that are going up and down today. We have healthcare going down the most. This is a lot of times whenever one big company goes down, like Eli Lilly, the other companies in that sector go down. Um, Biotech ETF is going down with the drug weight loss drug companies. We have in the banks ETFs is down a lot. Okay, so let's look at our talking points. Our talking points start. Okay. Okay, so we know the stock market likes certainty. Whenever uncertainty is in the stock market goes down. We've had several indications this week that having Trump in as the president will cause uncertainty because he basically does things randomly, off the cuff, crazy remarks, and Wall Street likes certainty. This week he said some remarks that Taiwan should pay for its defense, and um, there were talks about the limits of exports of AI chips. So all this is affecting stocks and the profitability of stocks. And if he does this all the time, it's going to make the stock market like um, go up and down every day. And we will have a new comment every day at the front page of the newspaper. Trump said, um, so that's not too good for the stability of the stock market. So I'm adding this as a catalyst for market to go down. And it could make the stock market crash if it's the worst, if it's bad news. We never had that as an issue with Joe Biden because Joe Biden is a little bit more consistent. Okay, so we've been saying this from the beginning of the year. Reversion to the mean. Healthcare, telecom, financials, energy, utilities, and biotech did worse last year, will do better this year. Okay, it took until July, but we're finally seeing that reversion starting right now. So these sectors are actually outperforming in the last 2 weeks. Um, and the S&P and the tech stocks are up 20% this year, but um, these stocks are starting to come into favor. So we have a broadening out of the stock market now. Let me see. All right. Okay, we still have an inverse correlation to the U.S. Treasury rate and the S&P 500. So today it's scheduled to go that the Treasury yield is going up, so the stock market probably is going to go down. The same thing with the 2-year. It's the same chart. Right. So our major variables in the stock market have not changed a whole lot since last week. Oil has not changed, $81 a barrel. We have inflation currently at 3%. Dollar index isn't changing either. So the US dollar is steady and gold is up 5%. All right, so we're in earnings season right now, and we can see the US dollar has been appreciating this year. So there's a very good chance the multinational stocks that are reporting this coming week are going to report that they had currency headwinds. So they make less money if the US dollar goes up. The companies that do business overseas. So you got to be ready for that. Um, right now we still have a neutral fear and greed index. It's been gradually going to fear. Right now we were at greed last week, and no, we were at neutral last week. We're at neutral now. So we're right in the middle of neutral and greed. So there's no real action to take. We're starting to see fear come into the market with the VIX. We'll show that pretty soon. But individual investors are still bullish. Um, the interesting thing about right now, we look at our momentum indicators. This is the percentage of the S&P above the 50-day moving average. It went up 1%. So we're actually gaining momentum as the stock market goes down. That's because the top 10 stocks go down, but the Mag 7, but the rest of the stock market is going up. So that's interesting that we could be losing or gaining momentum we as the stock market goes down. So right now, 76% of the S&P is above the 200-day moving average. That was better than 72% last week. Okay, so let's look at some of our talking points. Okay, the VIX is starting to go up. People are starting to want to buy protection. We had some volatility this week where the major tech stocks went down. So, we're starting to see fear coming into the market. You can see that little VIX um, move from 12 to 16. All right. So in our paradigm, this is our investing emotional chart. You can see that we were probably last week, we were at the top of that front page media attention. Now we're actually in denial. We have several of the major tech stocks that have been juicing this market starting to correct. And people were saying, nah, I don't believe it. Nah, I'm gonna keep holding these. And then whenever the stock market starts going down, like we have in summertime, we're gonna start seeing fear maybe and capitulation, maybe in the stock market. Seems like all the moves in the stock market this week were due to geopolitical issues. The comments by Trump and Biden. So, okay, that's a new thing we're adding to it, may lead to a crash. Random Trump actions or words. Okay, we're gonna be ready for that. That's probably gonna be the next 4 years of random Trump actions or words. So that's gonna introduce some volatility. Okay, we already went over this sector performance. We're starting to see an outperformance of the worst of last year. And now the tech stocks are starting to go down. So let's see if the worst end up being the first. We don't know, but last week, all the worst performed the best compared to QQQ, communication services, and IT. All right, and the weight loss drugs this week went down a lot because there's increased competition. So Eli Lilly is up 50% this year, and it went down maybe 8%, but it's still up 40% this year. Okay, so we still have the IT communication sector is up the most. Then the financial is the third, and energy utilities. So we're going to keep an eye on this sector performance because it seems like right now there is a rotation. Let's look at we already looked at that. Okay, so the analysis picks from the beginning of the year. Amazon and Meta are still doing really good. Texas Instruments up 20% now. The biotech is starting to do really good in the past week or two. And KWeb, the Chinese ETF, still isn't doing very good. Okay, so this is an article on Yahoo Finance. Stocks face summer slump as tech rally fades. Political risks rise. Okay, this is basically, in a nutshell, what we've been saying so far in this meeting until right now. We have the big news on this story is we had Donald Trump suggesting an overhaul of U.S. policy on Taiwan, the epicenter of global tech supply. Um, so, and President Joe Biden tightens export restrictions. That was enough to have a sell-off in all the AI chip related companies. So that's going to be a new phenomenon for us investing, waking up every day wondering what Trump said. All right, so the other thing is next week we're going to have Mag 7 earnings coming out. So that could turn the stock market up or down. And right now we're getting to a point where it's oversold, but I don't know. We'll have to see. But this article says Q2 is likely the beginning of the process that sees the earnings dominance of the Magnificent Seven give way to a fundamental improvement, a broader fundamental improvement. That means moving from the big tech stocks to the worst to the first. So Bank of America says that political risks are number one risk in the stock market, and that is totally evident this week with all this going on. So we have some variables now that we didn't have for the past 4 years that are affecting the stocks, and we got to really make sure that we understand, if there's a news story that comes out that a political person said something, we have to really understand what the value of a stock is so we don't get scared out of a position. I put together some charts of interest. A lot of times when we have a pattern in a stock and the pattern changes, it's good to note that. Right now we've had a downtrend in the XLE. This is the energy sector for quite a while, since at least March. And now it looks like we might be breaking out of that downward trend. Let me see. Here's Google. If you look at all of the Mag 7, we're oversold and we're at the bottom of the channel. And this is right before earnings season. So if we have a good earnings report for Google next week, we'll probably go up to here. But we're at an inflection point with almost every major tech stock. Whereas if we have a bad earnings report, we'll break through this and then we're going to make a new pattern. This pattern has been good since the beginning of the year. We've been in uptrends in Google for like a year now or more. And it's been one of the most reliable stocks. But whatever happens in the next week will totally determine whether we continue this upward trend or we break out of this and we go down. And if we break out of this channel in a lot of these major tech stocks, the stock market is going to like super correct because all the big tech stocks are a major portion of the averages. Let's look at, this is Google. Let's look at Amazon. Same exact chart. We have oversold conditions and at the bottom it's trend lines. So Amazon, let's look at Apple. It's a very similar pattern. It's near its bottom. Another interesting thing about all the tech stocks, they're all at a certain moving average. Like Google is at a 100-day moving average. This is the 200-day moving average down here. So we have a long ways to go before we hit the 200-day moving average. So that is a layer of support. And the same thing with all the Amazon. See this 200-day moving average is down here, but right now the 100-day moving average is a level of support for the stock. So we also have that with Apple. Apple is hitting its 50-day moving average right now. All right. And Meta is a very similar chart. We can see that it's at the bottom of its channel and it's oversold. And it just bounced a little bit off of that this yesterday. Microsoft, very similar situation. We have an oversold condition. Has a little while to go before it's at the bottom of its channel. All right, so it looks like all the tech stocks have kind of lined up near a point where they're either going to break through this channel or continue their upward trend. I'm hoping they go up to the upward trend, but I'm ready for a summer swoon where we go maybe sideways like this throughout summer. I don't know. Um, but we're definitely oversold in Microsoft. And Tesla seems like it's in a sideways pattern. Their earnings aren't that great, and um, we have a lot of geopolitical problems where the new where Trump doesn't hasn't traditionally helped the EV companies. So looks like, yeah, Tesla is probably at the top of its range right now. And Nvidia, the other major tech stock, you can see that it's getting to a point where it's oversold. It has another 5% to go before it's at the bottom of its trend line. And it's just maybe 10 more points in the stochastics before it's totally oversold. So all the tech stocks are lining up to a point where they're oversold and at the bottom of their stochastics. So that's usually an indication to buy, but whenever the stock market goes down, um, the stochastics don't work. If we're crashing and every stock is going down, we just have to use the 200-day moving average, the 100-day moving average as the levels of support. And we also use prior levels of support in the stock. So if we start going down beyond this trend line, for instance, in NVIDIA, we have to look for prior levels where we had support, like right here. We had some support right here and some support right here. You can see that this was a major basing of the stock before it took off at the beginning of this year. So these are natural levels for the stock to go down to in a sell-off. Okay, there was an article that came out yesterday. Netflix adds 8 million subscribers, disappoints on revenue. So as I was saying earlier today, if a stock is does really good with their earnings, but disappoints in their outlook, then stock usually goes down. I did a calculation of the earnings projections for the next couple of years. So this from last year to this year, the stock was earnings went up 35%. And for the next couple of years, let's say it's growing around 18%. So its 4P is 35. So it's a PEG ratio of 2. So right now, Netflix is pretty expensive. So if you divide 643, the current price, by 2, you get the fair value of the stock, 327. So for Netflix, the reason why I haven't been interested in this stock is it's pretty overvalued. It's 2 times what its growth, it's trading at 2 times its growth rate. So um so that's a little bit too pricey for me right now. They have a new ad-based tier, and most of the customers that are signing up now are using this ad-based tier. It costs less, but they have to watch advertising. Um, and there's a password sharing crackdown. So they're making people that share passwords sign up, and that's helping their company. They have a loyal customer base. They have a pretty steady growth in their stock, maybe probably 13 or 18%. And they're getting more profitable. So basically, their business model is to make content and allow people to watch that content. But as you have a lot of content and you already put money into creating the content, now you're just showing the content. Your profitability goes up. So that's kind of where their um, business model is. And they have some competition from YouTube and Disney, and that's those are their two major competitors. Um, so, but they're the biggest and seemingly the best right now, and they're the first mover. So all in all, I would wait for the stock to go down in half before I would be buying this one. Okay, so let's look at our statistics for Netflix. We see the market cap is 277 billion. Their PEG ratio, according to Yahoo, is 1.5, and their forward PE is 35. Okay, so their profit margin is a little bit better than our minimum, which is good. We like 13 or greater, and this is 18. Return on equity is 30. That's double what we are looking for. So, so it has good numbers. Um, it's just a little bit expensive right now. All right, so here's an article that came out. It says the rout in tech stocks is a golden buying opportunity for investors, analyst says. Okay, so we had a investor in this article talk about the tech sell-off this week. We had the Mag 7 stocks go down, I say combined 3 to 5% or more. Let me see. So this guy's talking about how, the talks that what Trump said affects the stocks. So this Dan Ives is a Super Bowl from Wedbush. He says that the everything that Trump says could be more bark than bite. Um, that's exactly what we're going to be focusing on probably every meeting for the next 4 years. Um, Things that come out of Trump's mouth, does it have an effect on the long-term prospects of a stock that we're looking at? So that's a new variable. Unfortunately, we're going to have to deal with, and um, so we have a bunch of comments that are going to be coming out. We just have to make sense. Does it help or hurt the stock? And is it it's gonna affect the long-term profitability of the companies that we're following. Okay, so we'll see what happens there, but that's going to be a variable that we add to every one of our talks from now on. Okay, this article came out, Eli Lilly, Novo Nordisk, and their rivals skid on a new weight loss drug from Roche. So right now, Eli Lilly and Novo Nordisk are super profitable. They can't make enough of their weight loss drug to sell, but there is competition coming around the corner. And one of the biggest problems with Eli Lilly Novo Nordisk is they have an injectable. Um, they call it subcutaneous injections. So you gotta go in for or get a shot for this weight loss drug. These new companies are making a pill, and that those pills could eventually make a dent in the market, but not yet. Everyone had these are name brands. Everyone knows about these, and the doctors particularly are prescribing them um, because they have better efficacy. But um, Jim Cramer says that the sell-off is overdone. All right, so but we know from looking at these in the past couple of weeks that they're overvalued right now. So, okay, now another article came out. One no-brainer, large cap growth ETF to buy right now for less than $200. Okay, this Schwab US large cap growth ETF has done pretty good. SCHG is the symbol. It's done pretty good for the past year to date, up 21%. 3 months. It's well, let's look at the last bull market, 16% 10-year performance. That's really good. Um, So if you look at their performance for 2020 last year, 50%. 2023 was down with the stock market was down that year. You can see these are stellar returns, around 16% a year if you average it all out. Can you guess at what stocks are in this ETF? Well, it is the Mag 7 primarily for like 80% of that portfolio. Top 10 holdings of 59%. So you can see that the Mag 7 plus Eli Lilly and Broadcom are the top holdings for this. So that's no um, surprise because these are in probably almost every major tech ETF or major mutual fund. And let's look at some of the holdings out of the top 10. We have Costco, um, we have MasterCard, we have Intuit, GE Aerospace, Lam Research. Okay, so we have a very diversified bunch of stocks, but most of these are the ones that we're following. They have consistent earnings over time, and they have like a moat. All right, so that was a good little article. Um, okay, so let's look at the charts of Eli Lilly and Novo Nordisk. They went down big this week, probably like 10% or something like that. But you can see that they're also at the bottom of their trend line and trend lines. So if you see these black trend lines, you can see that they're still a little bit overbought. A lot of the major tech stocks, a lot of the largest stocks in the world, in America, are pretty much at a decision point. Either they break through their trend lines or and continue their upward trajectory, or they start going down and there's a rotation out of the Mag 7 into other parts of the market. So you can see Novo Nordisk is the same level, and it's at a point where it's oversold. All right, so that was a good exercise. Glad we did that. Um, so I think that's all I have to say for now. Seems like right now what's happening is we're just at a point where we're at a decision point for a lot of these indexes that we're following. Um, we're getting to a point where we're oversold. Earnings week next week is going to tell us what is going to go on with the stock market as okay, we have Tesla, Microsoft, Google, Apple coming out with earnings next week. And that'll determine if the stocks go up or down. So we will see. All right, I hope you have a good investing week, and I'll see you next time.